Hey Bowtie Nation, Joseph Hogue here, and what a year it was. 7 stocks in my portfolio returned 100% last year alone, and I found 7 more to buy now that could double in 2025. I'll reveal those 7 stocks to buy now for 100% returns in 2025, along with what we're looking for in these kinds of triple-digit returns. But first, it helps to know what went right in last year's stocks, how 8 stocks alone returned a profit over $510,000, and what it can tell us about investing this year. You see the 8 best performers here in my trading account, from 171% return on shares of Palantir to 94% on Shopify. And if we break these down into groups or themes, we see 4 ideas that can guide your investing for 2025. These 4 themes are, of course, 1. Artificial intelligence with Palantir, SoundHound AI, Innodata, and Duos Technologies. AI was the theme last year, and we're just now starting to see the returns flow down to those use cases and the companies leveraging that technology. Fintech also had a very strong year with SoFi Technologies and PayPal on my list. That intersection of technology and banking finally paid off, and it looks like this theme could be one of the biggest winners for 2025 on deregulation in the banking industry. E-commerce wasn't necessarily one of the big themes last year, but has outperformed for more than a decade with that shift to an online world, and we saw that last year with shares of Shopify and The Trade Desk. This 4th theme is broader though, the rise in penny stocks with 3 of our winners, SoundHound AI, Innodata, and Duos Technologies, all starting the year under $1 billion market cap. It's these kinds of small, fast-growing companies that give you the best chance to double your money. Now, you never want to be reactive to the market, buying a stock or a theme just because it worked last year, but all 4 of these themes, AI, fintech, e-commerce, and penny stocks, all have those bigger picture economic fundamentals that can drive them this year as well. Let's get started with our first stock to buy, Symbotic, ticker SYM, but stick around and I'll show you exactly what I'm looking for in these 100% plus stocks. Symbotic is using AI-powered robotics and software to automate warehousing and logistics with a 4-year development partnership alongside Walmart that alone could send revenue booming higher. Just installing its robotic systems into warehouse operations is a $432 billion market, with the operational side another $500 billion. And while financials are shaky here, the company is rapidly growing into the efficiency that will produce cash flow, reducing installation times by 1/3 in just 2 years. So what we have here is an evolutionary step in that trillion-dollar warehousing industry, a leader in the space that is already operating warehouses for Walmart, Target, and Albertsons, and with the backing of Walmart, which owns 14.5% of Symbotic. Growth here has been insane, with revenue up an annualized 91% pace over the last 3 years, though it's still operating at a loss as it builds into that efficiency. Symbotic has a $23 billion backlog that's still just a fraction of the market opportunity here and is going to support that revenue growth higher. Shares did plunge in November when the company delayed its annual report after finding weaknesses in internal controls. It did have to restate quarterly reports and said some revenue was booked earlier than it should have been, but the $40 million change in revenue was immaterial at this point. I used the drop as an opportunity to pick up more shares, which are less than half the price they were at just last year. Another turnaround stock I'm watching here, solar panel maker Enphase, ticker ENPH, the 6th worst stock in the S&P 500, down 48% last year. But this wasn't an Enphase problem, more of a broader one for the entire solar industry. First, on a flood of cheap Chinese solar panels hitting the US market and driving prices for panels down 50%, and then after the election on fears President Trump would kill renewable subsidies. All this has led to bankruptcies and job losses in the US solar industry, but a hard line on China from the Trump administration and higher tariffs could mean a turnaround for Enphase and the few companies left in this market. Trump hasn't exactly been supportive of alternative energy, but there's no doubt that we're going to need more electricity generation to meet those growing demands from data centers that traditional utilities just aren't going to be able to meet. Against the industry problems, Enphase is expected to see revenue boom 31% this year to $1.75 billion, for earnings to jump 76% from last year. Just as important in the analysis of these beaten down turnaround stocks is this cash flow statement. Even in the darkest last 12 months, the company booked positive operational and free cash flow while also being able to pay down debt. It's got a healthy balance sheet, which means Enphase is going to be the solar company that survives to grab market share when the industry turns around. We're just getting started on our list of stocks to buy, but this is all part of our Best Stocks 2025 series. Over the next 2 months, I'll be highlighting the best stocks to buy in every theme, from dividends to growth, the headline stocks that could surprise, and the news that could drive the stock market. And because I think we need more accountability here on YouTube, this year I'm tracking those stock picks. Look for the link in the description below for access to our best stocks tracker. I'll add stocks to the list and track returns against the S&P 500. You'll get free access to that list anytime you want and a heads up before the videos come out, so check out that link below. We're seeing the pullback in shares of Supermicrocomputer, ticker SMCI, that I talked about in our December 9th update, but this is another one that could jump over the next year. And Nation, the question here is no longer about those accounting allegations or others brought up by Hindenburg, but about how long it's going to take the company to put together and file those late reports to avoid a NASDAQ delisting. I'll link to that November video below where I laid out why those allegations were really a non-event for the company, where shares have jumped more than 100% since that low. But the market and investors, being as impatient as ever, are again running scared, waiting for those late filings. SMCI has found an auditor. An independent investigation found no smoking gun or wrongdoing, but it's still going to take a month or so for the company and its auditor to file those reports. As I pointed out in that December 9th update and valuation, we can use previous value multiples on price to sales to forecast a target here of around $40 a share on the low side and as high as $102 or more on the high side. Folks, this company is a leader and pure play in that AI data center server solutions theme, one expected to drive 66% revenue growth and 25% earnings this year, all at a valuation that is a fraction of where it was last year. Next here is one of my favorite real estate plays right now, shares of Innovative Industrial Properties, ticker IIPR, with an 11% dividend yield on top of what could be a very strong return. Now, IIPR is unique among real estate investment trusts or REITs in that it leases to companies in the regulated cannabis industry. The company has stepped in to meet the industry's limited bank funding to supply real estate for grow and retail operations. IIPR owns 111 properties with 30 tenants across 19 states, and while all cannabis-related stocks have fallen out of favor lately, I consider IIPR more of a real estate play than marijuana here. Our shares here did take a big hit post-election when Florida voted down to legalize its marijuana, but the trend to legalization is still intact. The stock took another nosedive more recently when the company reported PharmaCann had defaulted on 6 of its 11 leases for December. Now, PharmaCann does account for 17% of IIPR revenue, and cash flow will be more uncertain over the next few months, but there is a lot of overlooked value here that the market isn't seeing. First, the industrial properties, easily the healthiest segment of the real estate market right now, can always be reworked to serve other industries outside of cannabis. There's still a case for the current business model as that cannabis use and regulation loosens, but the real value here is hidden in those industrial properties with almost no leverage. The company carries just 11% debt to assets in an industry that usually carries as much as 5 times that much debt, so with just a little tweak to the business model, IIPR could leverage up and increase its assets as well as its revenue. Like a lot of the stocks on the list, the company is trading at half its share price just last November, which means just getting back to that point would be a 100% return from here. We've still got 3 more stocks that could go 100% plus over the next year, but I also want to show you what I'm looking for in these kinds of moonshot investments, how to find these on your own. And first, like we did earlier, is looking for those big picture themes winning in the stock market. But now this isn't about just blindly following momentum in stocks. It's about finding those broader forces driving a particular theme or a group of stocks. It's about tapping into the growth themes like AI, e-commerce, and fintech, then asking yourself which of these themes still has room to run over the next year. We know that e-commerce is a trend that has been developing for more than a decade, but still has a fraction of the overall market. With our lives increasingly online, it's a safe bet that that trend is going to continue, and the market leaders will continue to benefit. Fintech has been a drastic reimagining of traditional banking, with growth still on the way to a $320 billion market opportunity, and now with the potential for deregulation amplifying that growth. But then these themes and the returns are just as much a function of the bull market as anything else. Even the best stocks are going to suffer if investors get skittish, so you need to also make sure that the market fundamentals align for stocks to keep heading higher. I outlined in our 2025 outlook how we're likely to face a correction, a 5 to 10% sell-off in stocks over the first 3 months of the year as the market digests 2 amazing years of returns, but that longer bull market fundamentals are still intact. Now understand, if that 5 or 10% correction hits, a lot of these hot stock themes are going to fall even further, maybe even getting up 15 or 20% as investors get scared. There's nothing to signal a deeper bear market crash here, folks, so we're going to see a rebound back into these themes for the rest of the year. Your challenge is not to get scared out of your stocks along with the rest of the market when that short correction does come. Within the stocks themselves, we're looking for that revenue growth faster than peers, a clue that the company has some kind of a competitive advantage that is enabling it to take market share from competitors. So you're going to start here with the income statement and comparing the 2 or 3 year revenue growth for stocks in each industry. And since a lot of these companies are newer, growthy tech companies, we also want to watch that cash flow to find these quality companies already generating cash. So here on the cash flow statement, You're looking for an increasing trend in that cash generated by operations and a positive free cash flow. Back to our list though, and UiPath, ticker PATH, is another AI stock I've been buying for a while in that robotics theme. This isn't the physical robotics you might be thinking about, but robotic processes through software applications. This kind of business automation is going to be key for a lot of companies, and UiPath is a leader in that machine learning and applications making it possible. Management is estimating market growth to $30 billion over the next few years, which would be 15% annualized growth. Even a fraction of that would mean decades of higher sales for a company that just booked $810 million last year. UiPath added nearly 2,000 customers in the year to the third quarter, and what I like here is that new customers often start with some basic cloud automation services, but can then be sold into platform products for more revenue, so we're going to see that sales momentum continue to grow. Next, about the only AI stock that hasn't jumped lately, $2.6 billion Recursion Pharmaceuticals, ticker RXRX, but it takes just one news release in these biotech stocks for the shares to shoot higher. Recursion could revolutionize drug discovery through its language model workflow engine, performing complex drug discovery tasks using a natural language interface. It's doing this by running experiments through purpose-built AI models on massive datasets, enabling it to screen and find the compounds that aren't going to work, basically to fail faster, so it spends less time and money developing the drugs that will work. The idea here, folks, is big pharma companies like Merck and Eli Lilly are facing a patent cliff amounting to nearly $200 billion in lost revenue, while also pulling back on their own research spending to find new drugs. So through the use of AI, Recursion could dramatically lower the cost of drug development, an advantage that would be worth tens of billions to these big pharma companies. The company has 6 programs in pipeline trials for 7 indications, 4 of which are in phase 2 and expecting results within the next 2 quarters. Now, I don't cover biotech much here on the channel because you really need that industry experience in either drug development or pharmaceuticals, but Recursion is different here. The technology it's developing can be used across drug development, and that makes it more than just a play on one blockbuster drug. NVIDIA recently invested in the company with a $50 million equity investment and is providing priority access to hardware and resources. Recursion also has partnerships with major healthcare companies like Bayer and Genentech for research, driving $58 million in sales this year. This next 100% upside return is going to surprise you, and it could be the big breakout of 2025, but if you want to see the stocks that have driven my biggest profits, the ones I'm still buying, check out the video in the corner here. 5 stocks that have alone produced over $640,000 in profits, with more on the way. Shares of Rivian Automotive, ticker RIVN, could be the breakout surprise for this year, down 43% last year and tiny at just $13.5 billion market cap. While shares of Rivian have been under pressure along with all things EV on fears that President-elect Trump is going to kill subsidies to the industry, Rivian has the partnerships and the cash flow it needs to grow and become the EV truck maker. First, Rivian is a major supplier of trucks to Amazon, delivering over 10,000 electric vans with a contract for 100,000 total. Amazon is also Rivian's largest investor, owning 158 million shares and 15% of the company. Rivian ended exclusivity for its Amazon trucks, freeing it up to sell to others, but on that 15% ownership stake, the partnership is still very strong. The company has also partnered with Volkswagen in a $5.8 billion deal to share software and electrical architecture that shores up immediate cash needs. And Rivian just announced last month for a $6.6 billion loan from the government to build out its Georgia production facility. So while cash flow and earnings are still negative here, the company has the cash it needs to keep growing, with estimates for 13% growth this year to $5.3 billion. And here, if it can reach that point in production like Tesla did, where costs come down on that scale, this could be the best deal on the list. It's already cheap at just over 2.3 times on that price to expected sales basis, and has the flexibility to become the leader in EV trucks. Get free access to our 2025 Best Stocks Tracker and advance notice when new stocks are added with the link in the description below. Or click on the video to the right to see the stocks producing the biggest profits in my portfolio, and which ones I'm still buying. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.